Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to someone who I have been following on LinkedIn a lot, and he's wearing multiple hats. So I want to talk about all of that today. Mr. Seth Bradley. Seth is a real estate broker, an attorney, a syndicator. He owns a fitness gym, and that's what we were talking about right before we started recording the podcast, because you guys know that I love talking about fitness. You know, money is one thing, wealth does matter. But as I keep harping on that, it's a triangle. You got to have your wealth, your physical health, and mental health. All of that to be together for you to enjoy the wealth you're building. So I'm very excited. Welcome, Seth.
Thanks, Alpesh. Really appreciate you having me on, brother. I mean, that's you just spoke the truth, man. I mean, wealth is nothing without health. I mean, when your health goes, that's when, nothing else matters. So you've got to take care of your mind and your body.
Absolutely. Hey, so tell us something funny or interesting about yourself.
All right. Something very unique, I guess, is I was born in South Korea.
Okay.
I'm actually adopted. I was adopted when I was a couple of months old by a wonderful family in West Virginia. So that's how I ended up there. And I grew up in West Virginia. I live in California now. So when I tell people I'm from West Virginia, they're like, wait, what? Because I'm probably one of like a dozen Asians in the whole state.
But wow, that is interesting. So I'm going to add another interesting tidbit to this. So Seth is a very common last name. The part of India I come from, it does mean rich. This guy Seth means he's a rich person.
That's interesting because my last name is a very common first name, Bradley.
Yes, that's true. That is true.
Yeah.
I had a friend named Bradley in my school as well, so I remember that.
Yeah.
So hey, I also read your bio, and you were in medical school. So why did you leave medical school and went to study law?
Yeah, I mean, I think it goes back to growing up in West Virginia and just coming from a blue collar family. My dad's a retired coal miner, my mom's a retired school teacher. And, I never really got into never really thought about being an entrepreneur, owning a business, or, buying a bunch of real estate. So it was just like, okay, well, what's the best job that you can get? And I was pretty smart growing up. I don't want to brag, but school was easy for me. So it was just like, well, what's the best job you can get? And for me, that in my mind, it was being a doctor. Right. So that's what I went into, not because I had a passion for it or I felt like that's what I want, my purpose or anything. It was just like, well, that's the best job there is, W-2 job there is. So I'm going to be a doctor. And that's why I went down that pathway. And I got into it about a year and a couple of weeks before I just said, man, I hate this. Like, this is not what I want to do. I mean, when you're in med school, the first couple of years are academic, as they say. Right. And then the second two are clinical. And everybody's just like, yeah, just get through the first 2 years so you can get to the clinical stuff. It's going to be fine. And I'm just thinking, man, that's just more stuff I don't want to do. I mean, The academic stuff was easy for me. The clinical stuff was just like, oh gosh, I'm just dreading it. I'm just like, I just don't even want to do that. I don't want the responsibility, honestly. That wasn't for me. So I dropped out with what I wanted to do. And just because I was really good at school, I just like, okay, well, I got to keep staying in school. So I went in and got my MBA while I was trying to figure out everything. And then during that time, I was like, okay, still in W-2 mindset, was like, okay, well, what's the next best job you can get? And for me, that was being a lawyer. So
yeah, $500 an hour.
So I went to law school. And, did all that. And that was great. I mean, in MBA school and law school, I started being exposed a lot more to business people and business-minded people rather than, your typical W-2 employees. And I started, the wheel started turning a little bit, but I was still kind of focused on getting a big firm job and doing the best I could in law school. And I did that. And I got a big firm job. I worked in big law for 6 years, but I figured out pretty quickly when I got there that it wasn't necessarily a long-term plan for me, but it is a great job. It paid well, and it allowed me to get to where I'm at today.
Oh, that's great. So did the decision of leaving medical school and studying law, did that decision impact you, who you are right now?
Yeah, like I said, I mean, it changed. It started changing my mindset. I started seeing, I always say I had a couple of aha moments when I was working there. I mean, a couple of, like the first one was just closing these. I was a real estate attorney. I am a real estate attorney, but I was closing these big deals for other people, giving them guidance, helping them, close these $100 million plus financings, and just meeting the clients. You're like, they're just regular dudes. They're just regular people. They're not, these people we put on a pedestal that, before we get into these big real these 100+ unit properties and office buildings and all this stuff, you think that, some huge corporation owns it or something. And sometimes they do, but a lot of times it's just regular guys. And that's when I started seeing, I started thinking, well, I want to be on that side of the table. I want the equity. I want the cash flow, rather than being the service provider. And the second thing was just seeing, the older partners at the firm were just, not necessarily unhappy. I mean, some of them were, some of them weren't, but just the fact that they were, 60, 70 years old, still in the office, still putting in all that work, getting in the office before me, leaving after me as a young associate. I'm just like, if I do my absolute best, if I do everything right, everything goes great for me. I start building a client base and, I bill all these hours for, 30 years. That's where I'm going to end up. And I started realizing that that's not what I wanted. You know what I mean? Money's important, but it's not everything. And I feel like to get to where those folks are, at least a lot of them, not everybody, but you have to make certain sacrifices with your life and where you spend your time. And I wasn't willing to do that. I started figuring that out during my journey in big law.
So, and I was laughing because I was thinking back how I worked at one of the big four consulting firms. Yeah. And I was watching the partners the same way, that they're working like crazy. And what are they getting out of it, right? And as you said, a lot of them were in 50s, 60s, and they were already still, working like crazy hours, right? And that was my aha moment. And before even I decide to get out of it, they let me off. So it just worked out so well.
There you go. I mean, I had a similar thing happen to me. I mean, I changed firms a couple of times to get back on the West Coast. And then, I started investing in real estate and I, bought the gym and did all these kind of things on the side. And when you're working at a big law firm, you don't have time to do all that stuff. Man. Like you do not have time to do that stuff. So your work does suffer. I mean, trying to bill all those hours and do something entrepreneurial like real estate or buying a business is just, it's really tough to do. And your work and your hours do suffer. So I had a very similar situation.
And your utilization rate, right? That does suffer.
Yeah.
So, hey, let's talk about your first real estate investment.
Okay.
What was it and how did it work out for you?
Yeah. It's really the economies of scale and being able to systemize stuff and really turn it from, not that, smaller properties aren't businesses on their own. I mean, each property is its own little business, but, when you start getting into bigger stuff, it really turns into a business and the vendor quality really goes up for me. I mean, I still do long distance fix and flips, but it's not my favorite thing to do. It's just something I know the markets at this point, and I've got some people in place that can handle it. But, when you go into these bigger properties and you have, commercial contractors and you have commercial property managers and you have, better quality, higher paid vendors and employees, it just makes the transaction, it just makes the business run smoother. And it's just, it's a more professional way to operate. And that's, and again, with the economies of the scale, when you scale up and you've got one roof over multiple units rather than one roof with one unit and all that kind of stuff. I mean, it's just, it's kind of the natural progression you make.
Let's talk about this, because you are, and of course, a syndicator, owner of multifamily, attorney, and a broker. What do you focus on?
Right now, it's multifamily, big multifamily. I've positioned myself as a capital raiser. And what the other service that I provide is being kind of an in-house counsel, so to speak. I don't necessarily want to be the real estate attorney or the SEC attorney on my deal, but what I can do is oversee the other attorneys and help hire those attorneys and, look over the contracts and look over everything. And then a little stuff that you don't want to send them, I can just take a look at and handle it myself. So I kind of serve as in-house counsel for that syndication team and raise capital through, my platforms and all that kind of stuff. But we are looking to buy directly in some choice markets like Charlotte and Cleveland, where I have teams in place and broker relationships that I can use. And we were actually just in Cleveland vetting a 110 unit property and then another 50 unit mixed use.
That's awesome.
Yeah.
So if law practice was working well and the real estate portfolio was growing, why become a broker?
Yeah. I mean, honestly, the broker thing is more of an ancillary thing. At first I joined thinking that I was going to do a lot of brokering myself. It turned out to be more of a networking thing. I mean, the people that I met at the commercial department in KW out here in San Diego have been really great. And I've forged some business partnerships with them, and we vet properties, and we actually have a couple of active deals out here in San Diego, some smaller ground up developments. So it turned into a great networking tool. But as far as like being a broker, I started out thinking I'm going to use that kind of as a tool just to add to, I'm going to be calling owners and making broker relationships anyways. I might as well add one more tool to the toolkit, being able to possibly sell the property and make a commission and also buy the property and make a commission. But, I haven't really used it to its full potential, but what it has given me is awesome networking opportunities,
right.
And two, access to CoStar and other, things like
that's huge.
That's huge. I mean, if you're an individual, usually you can pay almost $3,000 a month for national access. Yep. I mean, it's outrageous.
It's crazy. I have looked into it, and when I looked into it, it was like 30 grand a year about a couple of years ago.
It's insane, man. Yeah. So it's nice to have.
No, I agree. And so I also have, because of course I invest in real estate as well. I don't have any license, but a lot of investors, they reach out to me and they ask me, should they get a license? What do you think?
It is pretty helpful, especially if you invest in the market where you're at. So I don't invest a lot in Southern California. I mean, I said I do have a couple of development deals, but those weren't really sourced from the MLS. But it's nice if you do invest where you live to have access to the MLS and to have access to, all those different relationships that you can forge just by being in that network of realtors, especially, plug KW again. I'm part of KW Commercial. I mean, their network is so huge. I mean, they do, like multifamily meetups, they do like internal, residential meetups. They do so many different networking things, and you're connected to just thousands and thousands of people that are in real estate and could possibly give you a deal. So, I mean, the networking part itself, if you join, a national firm, is pretty big too.
It's awesome. What has been your best real estate deal so far?
Best deal? I don't know, man. I mean, I like to say the next one's going to be the best one. The one we're looking at right now in Cleveland is going to be a really good one, man. As soon as we take that thing down, I mean, it's going to be a home run. And as far as just on the residential side, we did a flip. We made almost $160,000 on a flip in Charlotte, which was awesome. And then we did some other commercial deals where we raised capital, and we're in the process, and we've just knocked it out of the park. I mean, these deals that we've taken down in Winston-Salem, North Carolina, there have been 2 big multifamily deals. Both of them are incredible. Distributions are on point, and everything is above and beyond what we could expect so far.
That's great. Any worst deals so far?
Worst deals? Yeah, I've had a couple of fix and flips from 2,000 miles away. I alluded to that earlier about trying to keep track of, I don't want to say, but yeah, low level vendors. I mean, some of these residential contractors. I mean, it's partially my fault. Partially, it's difficult to make the numbers work. So you've got to hire probably the lower end contractors, and also hire somebody that's going to get the job done. And it's a very fine line. And there have been a couple of times on a couple of flips where, man, it's taken us over a year to finish the flip. We had one in Cleveland that took a while. I've got one in Charlotte right now that's taking a while. Luckily, if you do buy it right, it doesn't matter.
Right.
We've had to change contractors multiple times, like that one in Cleveland I was telling you about. We still own that as a rental. It wasn't end up being a flip. We kept it as a buy and hold, and it's phenomenal. It makes it nets over $1,000 a month as a rental. And, we were able to cash out all of our money, and that one took well over a year to finish due to contractor issues. But, again, if you find a great deal, and especially with the market the way that it is, it's been going up and up, that'll save you. So
that's it. And I have the story right now as well. Currently, I'm dealing with a contractor because we had to get a unit fixed. There were some septic issues, then drywall got water and whatnot. And man, it's been taking me a couple of months. And this is the person I've been working with for last, I would say, 4 years. And even then, you never know with this contractor.
Yeah, man. They're a squirrely bunch.
Yeah. So what kind of other mistakes did you make when starting out, and what did you learn from those?
Yeah, I mean, I hate to keep going back to contractors, but it really comes down to it does, because that's where I've had the most issues is the contractors. I haven't had any problems. I mean, little problems with like property managers and stuff like that. I think that's been pretty easy, but the contractor thing, man, I mean, you got to vet these guys. I mean, don't always take, this is the takeaway. Don't always take the lowest bid. If you go and bid it out to 3 or 5 contractors, don't be like, okay, well, man, if I give it to this guy, I'm going to get $5,000 in my pocket. Not necessarily. I mean, don't take the lowest bid just because it's the lowest bid. Really vet the contractors, call the references, have the references give you more references, call them, and just make sure that you ask around.
That's awesome. So what's next? A gym, a brokerage, and multifamily. What's next?
Yeah, we're sticking with real estate, man. I mean, real estate is 98% of what I do. I mean, the gym's my wife's business. She handles it. I step in where I need to. But the real estate is really where the game is, and really trying to scale that up and take down larger properties and raise capital for larger properties and really scale this thing.
So what are some of the markets you are focused on now?
I really love the Carolinas. I mean, I look throughout the Carolinas.
Yeah,
I mean,
awesome.
I mean, there's those primary Carolina markets like Charlotte and Raleigh. Those are really tough. They're really tough. I've had more success looking in, secondary, tertiary markets like Winston-Salem, Greensboro, places like that still have really good metrics, really good demographics, that other people, if you're not from there, you don't even necessarily know about it or know where it's at. So I love the Carolinas, I love Jacksonville and Tampa and some other, Florida markets, as well as, there's a lot of markets in Texas that are good too. I've only invested passively in Arizona, in Phoenix, but I would love to take something down there, on the active side too, because it's a great market and it's drivable from San Diego.
Yes. And what do you think about the bubble, the stock market, real estate all over? The asset prices have been going up for years now.
Yeah, it's pretty crazy. I mean, there's a lot of different moving parts right now. I mean, the stock market, I got out of that game a long time ago, probably 5 years ago. I sold. I might sound like an idiot for doing that now, but I mean, I sold like all my Apple stock and all that stuff. But I ended up investing all that money into real estate, and it's done just as well, if not better. And you don't have the roller coaster, right? I mean, that's
exactly
the thing.
The emotional drama.
I mean, you can invest in, widespread index funds. And I think if you're going to invest in stocks, that's the way to do it, because stocks are similar, at least as a whole, to real estate, it will pretty much always go up for the most part. But the difference between stocks and real estate stocks are like this. You're on that roller coaster. Right. Real estate is consistent and you can produce consistent cash flow. I think there's very recently maybe a little bit of a bubble forming for the residential real estate, just because of the housing shortage. I mean, you just can't get anything right now. San Diego is crazy. I mean, I'm trying to buy a couple houses for my friends. That's the only time I do like residential sales or whatever, but I'm trying to buy a couple houses for my friends. I can't find anything. We went over on the last one, like 50,000 over asking price, and we didn't even get a seat at the table. I mean, it's nuts right now.
Oh, 50,000 is nothing nowadays. It's nothing.
50K over asking.
That's nothing. Yeah.
Take a walk.
So just last week in Berkeley, property was listed for 1.4, asking price. That was the asking price 1.4 and went for 2.3.
Wow.
I have never heard of that.
That's insane. Like, I mean, how do you even know what to price that? Like,
yeah. So don't even talk about 50, 100K now.
Yeah. But I think that's why, So the residential stuff, I mean, a lot of it has to do with the building costs that have went up because of COVID.
Right. Yeah. Lumbar. Crazy, man.
All of that stuff. But, if you focus on multifamily, some of the bigger stuff, and you make sure you buy it in the right market, the right sub market, and you're not dependent just on that appreciation. You're really focused on, something that's cash flowing from day one. You're safe in my eyes. That's the beauty in larger multifamily, is you can buy a project that's cash flowing out of the gates, and you're not dependent on one tenant or 5 tenants or 10 tenants. they can all move out and you're still profitable and you're going to be fine. And if there's a downturn, you just hold on to it.
Exactly. So yeah, that is how I compare real estate to stock market. Two things I always mention to all my investors and friends, that I got to have cash flow, and second is tax benefits.
Yeah, for
Stock
sure.
market does not give me any of that unless I invest in a dividend paying fund, and it's like meager returns.
Yeah.
And the liquidity in stock market is a good thing, but it's a double-edged sword, because
Yeah.
as soon as it starts dipping below, you're going to get out. This is the time to get in.
Like especially syndications. I mean, they save you from yourself. Like you read the news or something, and you panic, and you're like,
out.
"Can I sell? I need to sell," and you can't sell. So you're like, "Okay, well, I've got to write it out." And then you're going to be better for it in the end, anyways.
Exactly. Oh, this is awesome, man. Thank you so much. Let's take a quick break, and after the break, we will go through the same 5 questions I ask every guest.
All right, sounds good, man.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Seth Bradley gave us pretty good idea about why he went from medical school to big lot to real estate investor and entrepreneur. So, Seth, are you ready for 5 round?
I'm ready. Let's do it.
Would you be changing any business or investment strategy after this pandemic is over?
I mean, when it hit, it was all like we had to just stop and see what's going to go on. And then when the wheels started turning again, you had to just be a lot more conservative and more cognizant of your underwriting and what you were looking at, just to project out. Like, for instance, your market rent growth, we set that at 0%, last year. For the next 2 years, we just projected it at 0% rather than, 2% or whatever it might be. So I think just conservative underwriting. And that might, once we come out of the pandemic, get back to your normal conservative underwriting.
Right. Favorite real estate or finance or any other related book?
One that I really like to mention, and I mention it to family and friends all the time too, is The Miracle Equation. Hal Elrod, it's the same author as The Miracle Morning. And it's just, it's a little bit rah-rah, but it's awesome, man. I mean, it comes down to the one saying, and it's unwavering faith plus extraordinary effort equals miracles. Or in other words, if you take those two things and you just plug away at them, amazing things happen. And sometimes when it gets tough, I literally just say that mantra in my head.
Yeah, it's one of my, not the Miracle Equation, I read it, but my favorite book, top 2, is Miracle Morning.
Yeah,
and the second
for
is
sure.
The Go Giver. So I always recommend those 2 books to everyone. But you can't go wrong with any of Hal Elrod's books.
Yeah.
Could be Miracle Morning for entrepreneurs, Miracle Equation. They are all great.
Yeah.
Any tool or website you recommend or you use, let's say, for your underwriting or researching the market, etc.?
I'm pretty old school, at least when I do the very initial kind of, market research. I'll literally just Google. I'll Google the city and population and look at that line, see where it's at. Then I'll dive into city data. Then I'll dive into CoStar. I know CoStar is not accessible to everybody, but that, you can do a pretty thorough, market research just from doing a Google search, looking at the news articles, and then going into city data, looking at their crime maps, looking at their median household income maps and things like that. I mean, you can get a really good idea of, what you're looking at and the very down to the street of wherever your property location is. And then of course, just go to Google Maps and walk around the street and see what kind of neighborhood it is, see what the street looks like, see what kind of cars are parked there, all that kind of stuff, man. I mean, you can get a pretty good idea with free software.
Yeah, and city data is awesome. I always recommend everyone.
Yep.
Any advice for beginner investors?
I always say just get started. A lot of times you get caught up in listening to podcasts and reading books and, going to meetups and especially now it's a lot easier. You just get on Zoom meetings and get on, all these little meetups that people host on LinkedIn and stuff. And I think it's really easy to just get sucked into that and not take action. I mean, at some point you've got to take that next step. And if that's big multifamily, if you have a skill that you can bring to a team, go for it. Or, if it's just house hacking into something or, buying a single family or something like that, just do it. I mean, it's good experience. I mean, I know a lot of people say, buy as big as you possibly can, skip the little stuff. I don't necessarily agree with that. I think coming from a person that started with, house hacking in a duplex, I think there's a lot of value and a lot of lessons to be learned from those smaller properties that apply to the bigger stuff.
Totally agree. And let me put it this way as well. 50% of the guests always mention about this, right? Pull the trigger. And I keep harping on that fact. Don't get into analysis paralysis. And then after a couple of years, you're like, oh, the prices have went up. Of course. It doesn't stay there forever, right? So,
I mean, as long as it's a decent buy. I mean, I think especially because we're in California. Oh yeah. And I do see a lot of people go to markets like where I'm active in, like Cleveland, or places like that are really rough. I mean, you've got to know every street, and you buy like you get a house for free just by paying the back taxes on it, or get a house for $5,000 or $10,000, and you're like, oh, this can't go wrong. It can go wrong. So just know where you're buying as well.
Oh, I I was laughing, Bug, because you mentioned Cleveland. That's where I invested in a single family house, my very first investment out of state, and I lost every penny.
Yeah.
So I can relate to that.
There you go, man. Yeah. There you go. Luckily, when I started investing there, I invested with a guy who grew up in Cleveland. So he knows every street.
No, that's great. How do you give back?
I try to, a lot of times I actually had this happen this week where I have folks that are either in law school or thinking about law school, and they're reaching out because they listen to the podcast and they just kind of want advice on, what they should do. And I don't want to talk them out of law school or talk them out of being an attorney, but I do try to give them a neutral expectation of what to expect and what big law is all about. And, just to kind of keep an open mind about, investing and being able to buy back your time. Cause that's what I preach on my podcast is buying back your time. I mean, I got out of big law cause I just, I didn't want to be in it anymore. And I loved real estate, but a lot of people don't necessarily want to be out. They might like their job. They might not hate it. It might be somewhere in the middle like that, or maybe they love it. The best thing for them to do is just to keep making really good money and take that money and invest it somewhere. Stock market's fine for part of your portfolio, but you've got to also invest in real estate, whether that's direct ownership or through syndications where you're a passive investor. And for big law firm attorneys, passive investing is the way to go. And that's what I learned, because it's just, you don't have enough time to do the active stuff.
How can my listeners reach out to you?
Sure, man. Well, I'd love for your listeners to go out and listen to the podcast. PassiveIncomeAttorney.com would be the best place to gather some information. I also have an awesome lead magnet. It's a free, it's called the Cash Flow Calculator, especially for passive investors. You can plug in all your passive investments or where you project to invest for the next, I think it's 20 years it's built out for. And you can see a cumulative return of what that looks like. So you can actually visualize how you're going to buy back your time and how long it's going to take.
Thank you so much.
Sorry. Get that at intelligentpassiveinvestor.com.
Awesome. I'll put that in the show note as well. Thank you so much, Seth, for your time. I really appreciate it.
Thanks, brother. Appreciate it.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.